It's earnings time, and it's kicking off with the banks here coming up on Friday, January 12th. So I'm taking a look at 5 bank stocks that also happen to be S&P 500 stocks that are reporting. Now, if you're new here, I'm Hema Reddy, and I use price, time, and momentum to boost my trading and that of my tribes through ebooks, courses, coaching, and more. So let's take a look at the chart of Bank of America. Now, I'm going to quickly change this back to a monthly chart to just get my bearings on the longer term trend, remove any annotations that I don't need anymore, and bring us back to the daily for some key levels and potential directional moves. So Bank of America has been lifting up from its October low, and it exceeded the July 2023 high, which is a good sign, bringing us back in towards the month of November 2022. So that's a potential major sort of resistance area. All right. Now I'm going to switch this to a weekly time frame. I'm going to just lighten up this annotation so that I know it's from the monthly chart in terms of transparency, but keep it less bold. And now let's look at the weekly chart where we are coming off of last week's high, like we are in many stocks. So right now, looking at the RSI Power Zones, my favorite momentum indicator, and the price action, we're coming into an important support, 32.80, which we just tested today, 32.78. So I'm just going to put a little line there and then get to the daily. So now I'm going to go to the daily time frame. I'm going to thicken up that line so that I know it was from a weekly chart. And I'll make the monthly ones even thicker. This is something new I've been doing recently, and it's really helping have multiple time frame analysis on my charts, but not feel cluttered. All right, now I know that in this run up higher, we are correcting lower, but look at the RSI power zones. All they're really doing is going from overbought to oversold for a bull market. If this is a technique you're not comfortable with or tuned to or haven't heard about from me, you want to check out my winning RSI playbook. That's where I explain this. So what I'm looking at now is, well, how far down might we push? And of course, earnings release may accelerate or change that. My job here is not to look at the fundamentals of the market. I am looking at the technicals and giving you some key levels to monitor into the earnings release, all right? Then you must follow what happens with the earnings price action that unfolds. So looking at this chart, there's a key support level here at 32.13. There's also one at 31.52 and another at 30.86. So if we continue lower, those are the areas that might stop any potential move down or gap down. They're not all of them, they're just the next 3, okay? So for resistance levels, we take a look above here. Essentially, this entire range from a few days ago, the Friday, January 5th range, is important resistance. So if we're able to clear that, then you can see the monthly levels that the Bank of America stock may get up to. With all of this unfolding here, I also want to look at one final measure, and that's the 50% retracement of this entire move. That's down at 23.83. So that is also a support level on the daily chart. So right now we've tested an important weekly level. If the market continues below it, whether it's before earnings or after, you can see all the supports here from 32.13 down to 29.83 that I think are most important. Let's also include 30.45. I do think that there's more likely a pullback ahead before resuming higher, so I would not take action to go long here if you're not already. I would look to potentially buy weakness and watch the stock resume higher. Okay, I spent quite a bit of time on this particular Bank of America example. I'm going to go through those other stocks, but I'm going to do them as a faster pace and not explain on my annotation so much now that you are familiar with my approach, okay? So next up is Bank of New York Mellon. So let's just type that ticker in. So let's change this back to a monthly. Type in BK and look at it on a monthly chart. Surging higher since October, recently climbed above the February 2023 high. Again, I'm just changing this particular chart's time frame. we are hanging out after that level. Nothing really, earth-shattering happening. And on the daily chart, we can see with more detail how we broke above this resistance, but are just hanging out above it, near it. And right now, the momentum indicator for Bank of New York is relieving overbought conditions, but not giving me a bearish signal. That's very strong. So the key supports here are, and I use pink for support lines, 51.79. I'm always checking to make sure I get the precise low. 50.87. I think that is likely to limit short-term weakness. If it doesn't, then this entire range down here is important, this prior outside bar range, okay? So the high, the middle, and the low of it. On the flip side, if this stock continues higher, let's go back to some of that history and see what's the next key resistance up above. That is here at 53.63, so not very far away, but if it can really scale that, if it can kind of jump above that level, then there's a lot of room to run up until this $65 area, 64.63 to be exact, all right? Cool. We're halfway through now, coming into Citibank. So I'm gonna change this back to a monthly chart, change our ticker to C, and look at this stock. Now, all these vertical lines that you see, these are my personal notes to myself for any potential recommendation I've made on this stock in what I call my stock picks grid. So in all my different products and services, I share weekly stock picks in something called the Skinny on the Markets. I currently have a full lifetime access version, and that's called the Full Skinny, all right? So if you want my weekly stock picks, that's in there. I also then take one stock pick and dig deep into it and provide a specific trade recommendation, and that's in my Trifecta Trading Club. But coming back to Citi here, it's been basing on the monthly chart, trying to lift up after revisiting the March 2020 lows. Weekly will show us more detail. We can see here this move higher, and we're erasing last week's gains, but haven't broken below last week's low. So I'm gonna look at the low of 50.79. This is an important support level, and this is based off of concepts I teach in GAN trading patterns. So that's a course where I take WG GAN's elaborate chart patterns, and I've made them easier for modern traders to use. I also have a cool calculator in there that helps me find relationships between price and time. But one of the bonus patterns I teach in here is why I picked 50.79. All right, now let's move to the daily chart. All right. So uptrend with corrective pullback currently in motion, relieving itself from the bull resistance power zone on the RSI power zones, pulling back. So in addition to that weekly level, which I will thicken up here and change the formatting of, the main area of support I'd monitor is this range from December 19th. It's very important. So we're touching that old top of that level, 51.31. We came down to 51.26 so far today. It's Thursday. Session's not over yet. And yeah, I would watch for support in that area. If that area of support doesn't hold, again, into earnings, after earnings, then there might be more downside ahead. All right, for resistance, we have a range up above. So far, this small range here sitting at the January 4th high. All right, let's move along to JP Morgan. Also reporting the same day here. So I'm going to change to a monthly, bring up JPM, and here we go. This is most recently attacking the October 2021 highs, attempting to put in a new monthly high. We have a whole range of support on the monthly chart back at that October range. So since I know this is a monthly annotation, I'm going to want to translate over. I'm going ahead and formatting it now. Okay, I'm going to change this to a weekly chart. Here you can see that we come up and barely tested, or barely traded above that other all-time high there, 172.96, but technically did. So I'm going to put a dash line there. Yeah, JP Morgan's looking strong. However, it's not looking like it's in a position where you want to take action and go long now. So if you're not already long, this is not the time to do it. On the daily chart, if you were long from anywhere here, I would recommend protecting your stop at the bare minimum, okay, bringing it up to beneath this low from December 21st. This is based off of the drives, the directional moves higher in this market. So that's the real key support right now to JPM. If it corrects lower and still holds that level, we may see another push higher before a more substantial correction of any kind. But if it doesn't hold 165.68, then I'd watch out for a deeper setback, potentially down towards this old range from December 6th. All right. Last but not least, Wells Fargo. So that is ticker symbol WFC. Oops, WFC. And on the monthly chart, we can see that it has recently broken above the February 2023 range back in December, consolidating since then. There's this huge price high on the weekly chart that I'm going to pinpoint so I can keep an eye on it. All right, let's change this to a weekly chart. Interesting. We're hanging out at that level, but just consolidating. And looking at this chart here, according to this green vertical line, last weekend I presented Wells Fargo as a recommended stock to buy. So let me go ahead and look at my own notes on what the details were of my recommendation and confirm that what you see in the chart matches that. So the date was as of Friday, January 5th. The signal was a bull flag that looked like it was breaking higher. As you can see, that began, but then we started to pull back lower. But this trade would still be live because my recommended stop at the time, okay, not a new trade now, but the stop that was recommended at the time was below 47.78. And the target for this trade is up at 55.91, which still stands. So it could be that this market is taking a little bit more of a breather before resuming higher. So since it's also reporting earnings on Friday, January 12th, what could unfold? Well, 47.78 is not only where I would recommend putting a stop below, it's also a support level. The support levels after that would be, major ones I should say, would be 45.33 and 44.41. So if there's a push below 47.78, it would be hitting the protective stop of my prior recommended buy, and it would leave room for short-term bears to come back towards this support. Okay. But if 47.78 holds and shares resume higher, then 55.91 is where I expect them to go over coming months. Not right away, but over time. So there you have it. A quick look at 5 of the bank stocks reporting earnings Friday, January 12th. Lots you can take away from this video. So if you found value in it, please give it a like. If you'd like to hear more from me, please hit that subscribe button and please share your comments in the area down below. I'd love to know if this was helpful to you. I have a little guide here that tells me what bank stocks or what companies are reporting earnings every day. And I can share more videos like this, but only if you tell me that they're providing value and you want them. And again, I'm Hema Reddy, and you can find out more about what I share and teach at hemareddy.com. Here's a view of some of my offerings. All right, catch you next time.